Hey traders, welcome back to the weekly Forex Forecast. I'm going to show you in today's video why we could be on the verge of a volatility shock heading into October. And our number one job always has to be to avoid being on the wrong side of these kind of events if they take place. This is the reason why going into next week, I'm only focused on trades that could benefit from risk off. I do not want to be taking any risk on trades heading into next week. Okay, so let's have a look at the scores for the coming week, and you can see we do have the dollar and the CAD still top, although they are slightly weakening in the scorecards as before. However, one key thing to focus on going into this week when choosing which pairs to trade is the risk of a volatility shock heading into October. As I said before, we want to primarily avoid being on the wrong side of these, but if we can benefit from it and it does take place, all the better. The big problem we have heading into next month and next week is we have technically the majors are breaking down, and you can see this in the S&P 500, you can see this in the Nasdaq, the Dow Jones and the Russell, and you can see small caps especially underperforming here. And this is not just something which is specific to small caps. We're seeing the generals also breaking down with major structural reversals in their technical charts. Now, all of this is happening at a time when I just showed you the VIX has closed the month with an outside monthly bar. And for this to be taking place at the same time as we're seeing major technical breakdowns in the US benchmark indices themselves, it is suggesting those breakouts could pick up steam and we could really see volatility picking up as we head into October. Even more important than the monthly outside candle in the VIX itself is the VIX score in the data that we have. I've shown you this on Twitter for those of you who follow me. The VIX in terms of the monthly time horizon is now giving us a signal which we only saw back in June of 2021. And this is that sentiment is becoming extreme to the downside in the VIX. And the last time this happened was June 2021, and we saw 150% upside in the VIX itself. And now we've been looking in the shorter term for indications of the VIX picking up steam. And not only do we see that in the sentiment in the daily, but also we now have the VIX moving into the positive side of the scorecards, which it hasn't been for a while. In fact, we've been looking at risk on over the last month or so. It is now changing and telling us we should be focused on risk off. That is the signal from the VIX moving into the positive side of the scorecards. It means focus on risk off setups. And the problem in terms of volatility is not just contained to equities. You can see the MOVE index, which is the volatility index of the bond market in the US, is at levels which we saw last in September of 2008. In fact, it was the month before it exploded higher in September. We have exactly the same setup in bond volatility, and this is right at the point where the bond market and TLT, as you can see, is super extended to the downside, and it's really becoming a crowded trade and at risk of a snapback. And this snapback in the bond market could actually itself be a serious event for stocks. And it's interesting to me, although they're not exactly comparable, but it is interesting to me that the last time we saw this vol spike in bond volatility was back in September of 2008. We know what happened there, the great financial crisis. And that was caused by the failure to agree a bailout.
There's a political side to this and there's an economic side to this. Ali, stand by. I think we're going to have Christine Romans in a minute. We've got reaction coming in from many of the people who are now watching this newscast, thousands and thousands of them. Many of them are quite angry, as you might expect, on both parties, apparently.
Now, of course, this is very interesting. Why? Because we just had this weekend or yesterday the stopgap funding bill rejected by the House in the US. And this is a potential catalyst to trigger that volatility spike heading into next month. Now, I know many people have said, we've seen this before, there is going to be a deal, and that is true. There is still time for something to take place to mitigate this, but keep an eye on these discussions, because if, for whatever reason, a deal does not materialize over this weekend, we could be looking at a significant trigger for any vol shock heading into October. And of course, I've just outlined the conditions here and a potential trigger, but we also have credit spreads starting to blow out to the upside. And this is very, very significant. This is always what you see when you do get a volatility shock. Now, we don't know if there's going to be a volatility shock, but I've just outlined the multiple conditions that are in place, as well as a potential catalyst, and also credit spreads now, which seem to be confirming a potential shock coming in October, at least for the time being, unless something happens to put this genie back in the bottle. So based on everything we discussed, I only want to be taking trades in Forex pairs which can benefit from risk off, because if this happens in equities and bonds, Forex is going to be affected as well, and you're going to see risk off moves. So it's really an insurance policy, a safety net, to just be trading risk off next week, and that's why that's my plan. So as you can see from the scores, the US dollar is the number one still. Yes, it's peaking a bit in the scorecards, but I do favor now, based on everything we've discussed, dollar long plays. They are my favorite setups going into next week, and any risk off move will benefit the dollar as a safe haven asset. Because of that, I'm also not really interested in Canadian dollar longs now heading into next week. It's also peaking in the scorecards. The New Zealand dollar is also doing quite well in the scorecards, but this is a commodity currency. And we have a very special set of circumstances here. This is why I'm being careful, not just picking the top side of the scorecards or the bottom side. I'm carefully selecting and curating risk-off trades. So the CAD and the New Zealand longs are going to be off the watch list for the time being. Primarily the dollar longs, but I also like, to the downside, the pound. And I like the pound versus the Swiss franc, because the Swiss franc is kind of bearish to neutral and the pound is kind of bearish to neutral. This sets up kind of a range play. When you get two neutral currencies, either too bullish to neutral or too bearish to neutral, or two bullish currencies and two bearish currencies, you can actually trade those against each other on the basis that they're likely to range. So outside of the dollar plays, which are my favorite highlighted in gold this week, I am interested also in Swiss franc longs, and that's primarily versus the euro to the downside and the pound. Both of those are scoring weaker than the Swiss franc, even though the Swiss franc itself is not particularly bullish, but the Swiss franc will benefit from risk off. And aside from that, the final market that I like is euro pound to the upside. The euro and the pound are both weak in the scorecards, but any risk off move should see the euro appreciate against the pound. So going into next week, I like pound dollar to the downside, euro dollar to the downside, Aussie dollar to the downside is my three favorite. I like New Zealand dollar to the downside also, but less so than the previous three. I also like pound franc, euro franc, and Aussie franc to the downside, which all of those are kind of bearish to neutral in the scorecards, but downside moves versus the franc will take place in any risk-off event. And finally, I like euro pound to the upside, which is also a market which stands to gain from risk-off if it materializes. But at worst, we are just trading two bearish to neutral currencies against each other, so they should actually hold their range heading into next week. And so the final thing to take note of here is the yen. It's the number one short in the scorecards, and it's something, Japanese yen shorts, I've been highlighting in multiple videos. It's been for quite a while now the best short, and it's paid very nicely if you've been short yen. The issue I have is it is a safe haven asset, and it hasn't lost its safe haven status. There will be a spike in the yen if there's a risk off event or a vol shock. And so as a result, yes, in a normal week, I would be looking to short the yen. However, I'm sidestepping yen shorts for the time being, unless or until we start to see what's happening with volatility settle down. Because it's just an insurance policy. You know, the risk has gone up now, in my opinion, on yen shorts. Yes, we saw the BOJ step in and buy bonds again, which of course is bearish for the yen, but the problem is the safe haven status of the yen in any risk off event. So for the time being, I'm off yen shorts, despite the fact they're scoring as the best short in the scorecards. Okay, so let's have a look at the markets themselves, starting with crude oil. Last week, we traded right into the max profit taking zone in crude oil, and we reversed from this level. This level is here, or this area to say, if you trade into this and you're involved in oil intra-week, exit your positions, because you've got a 70% chance of the market pausing or reversing like it does here. Going into this week, crude oil is still a buying opportunity in terms of the data, but the problem is, very much like the Japanese yen being a short, in risk off, crude oil will get hammered. So I am going to personally be sidestepping crude oil long plays heading into next week. However, if you are trading crude oil, it would be to the long side. We assess crude oil every single week, so I am looking at it, but just bear in mind, I am not going to be taking crude oil long plays myself next week. Any pullback, if you are trading oil, would be viewed as an opportunity to look for an intra-week breakout into the 95. And of course, if there is no volatility event next week, then of course, you can see this rally. The second place would be down at the 87 area. If we trade into this is where I'd be looking for a short-term bounce in crude oil. Next is pound dollar. This was a market highlighted as a great short opportunity last week, and we traded right into the max profit taking zone, and that was where you should have been anticipating a potential pause or reversal in the pound and booking profits. Coming into this week, any pullback in this market is viewed as an opportunity to once again look for bearish breakouts. I'm going to be looking down towards the 1.260 area. And the second place I'm going to be looking for an opportunity if we hold the trend and we pull all the way back into the 1.2360. This is the second place I'm going to be looking for a short-term sell opportunity in pound dollar next week. Next is euro dollar, another market highlight in last week's video to the downside. We traded right into and just slightly through the max profit taking zone, and as soon as we traded through here in the 4 hours, we reversed. So a really nice opportunity from last week. Coming into this week, I can either be short this or do nothing. Buying this market's not an option, so any pullback, I'm going to be looking for a breakout intra-week down to the prior low and into the 1.0460. And if we hold the trend, we fail to break, we just hold and we pull all the way back to the 1.0700. This is the second place next week. I'm going to be looking for a near-term short in euro dollar. My third favorite market heading into next week is Aussie dollar. And you can see we're currently in a range, but I do favor shorts in this market. So any continued pullback is viewed as the opportunity to look for a bearish reversal intra-week in this market, down towards the range bottom at the 0.6360. And if we fail to break and we bounce and we just hold this and we trade into the previous high over here and the 0.6530, this is the second place next week. I'm going to be looking for a short-term sell opportunity in Aussie dollar. Of course, all three of these markets would benefit to the downside, in other words, the direction I'm looking to trade them, in any kind of volatility event next week or heading into October. And the final dollar pair here, outside of gold and silver, which I also really like next week, is New Zealand dollar. Not highlighting gold simply because the New Zealand dollar is performing better in the scorecards than Aussie, Euro and Pound. So those are my three favorites. But any pullback in this market is viewed as an opportunity next week to look for bearish reversals, double top, head and shoulders, down to the 0.59100. And the second place, if we fail to break and we bounce and we hold, I'm going to be looking at the 0.6080 area. This would be the second place I'd be looking for a near-term short in New Zealand dollar next week. Next is pound franc. Now, none of these are highlighted in gold until we actually get to gold and silver, because these are all kind of neutral markets versus neutral markets. The dollar is strong, the pound is weak, the dollar is strong, the euro is weak, the dollar is strong, the Aussie is kind of weak. So I do really favor those. Those are my favorite setups. But outside of that, secondary setups I'd be looking at are these. So we can see the consolidation in pound franc. Any continued pullback would be viewed as an opportunity to look for bearish breakouts next week, down to the 1.1060. And if we fail to break and we just bounce and we consolidate or correct all the way into the 1.1260, this is the second place next week. I'd be looking for a short-term sell in pound franc. Again, all of these markets from pound franc down to euro pound will benefit from a risk-off event in the direction I'm already looking to trade. Next is euro franc. I am anticipating this market to hold its range unless we get, a real risk-off event. So any continued pullback is viewed next week as the opportunity to look for bearish breakouts down to the 0.9620. Or if we hold the range and we pull all the way back and we test the 0.9740, this essentially becomes a range trade of two neutral currencies. This is the second place I'd be looking for a near-term short on the idea that this is likely to hold its range, because neither market is really set to outperform the other heading into next week. Unless, of course, like I say, we get risk off, in which case we should see this sell off. And the final franc pair is Aussie franc. I can either be short or do nothing. Buying this is not an option, and Aussie franc to the downside is a risk off setup. So any continued pullback next week is viewed as an opportunity to look for bearish reversals in this market down to the 0.58100. And if we just continue to trade all the way up into the 0.5970, this is the second place next week I would consider looking for shorts in Aussie franc. And the final Forex market I like heading into next week is Euro Pound. Again, these are my preferences. These are secondary. Not as good setups as these three in my opinion, but they are still viable. So any pullback in this market is viewed as the opportunity to look for bullish breakouts to the upside. I'm going to be looking up towards the 0.8725. And if we hold the range and we pull all the way back and we hold this trend line and we pull into the 0.860, This is the second place next week. I'd be looking for a near-term bounce and a buying opportunity in euro pound. Any risk-off event would see euro pound rally to the upside. Wrapping up the video with gold and silver. I have been saying to you guys, the dollar is strong. We need to be looking at shorts for silver and gold. And look at this move through the max profit taking zone. This is a huge move last week. An expectancy of only about 30%. And this is signaling further downside. And in fact, this kind of sell-off in gold is another piece of the puzzle that makes me think we could be looking at a vol shock, because what you're seeing here is you're seeing capitulation. You're seeing liquidation of gold, and that is a little bit worrying. That is exactly what you see when you get volatility shocks as well. So following on from last week's video, if you were either short gold or doing nothing like me, you either avoided being on the wrong side of this, or you even got involved in this to the downside. So coming into this week, I can either be short gold or do nothing. Once again, any pullback in this market, and it's highlighted as one of my top 5 favorite, in fact, setups heading into next week. Any pullback is viewed as an opportunity to look for bearish reversals intra-week down to the 1810. Or if we hold and we bounce and we just pull back and we test this high and we trade into the 1885, this is the second place next week. I'd be looking for a short-term sell opportunity in gold. Wrapping up the video with silver. This was a market I highlighted last week. I was only looking for shorts or doing nothing, and we traded into the max profit taking zone through it, and look at the rally we had from the max profit taking zone last week. Despite that rally, we dumped at the end of the week, and this is actually setting up further declines this week. So going into this week, I can once again be short or do nothing. Buying this market's not an option. I'm looking for an intra-week breakout down to the 21.40. Or if we hold and we bounce and we hold the trend into the 23 area, this is the second place next week. I'll be looking for a short-term sell opportunity in silver. So that is it from me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.